So hello, everyone. This is our 5th monthly Lake Org chat. We've done 5 of these already. I can't believe it. What's on your screen here are some of the subjects, the topics that we've already had these monthly chats, which can all be found on YouTube. So today we are focusing on the finances, so it's May. We are bringing this to you from the Extension Lakes program at the College of Natural Resources at UW-Stevens Point. And our goal is to provide educational resources and support to the broader community in regard to lake health. As you may know, Wisconsin is home to over 15,000 lakes, and over 750 of these lakes have an organization of some kind that protects and manages the health of the lake for current and future generations. We try to get important and timely information out in a variety of ways, and this year we're recording these monthly Lake Org chats to get this information out to you in a hopefully engaging way. So please let us know how we're doing. We do have a feedback survey linked on YouTube that we encourage you to fill out and let us know. We hope you'll join us for future episodes as well. So in this episode, like I mentioned, we'll be exploring all of the ways that lake associations and districts might deal with money matters, including borrowing money, accepting donations, payroll, filing taxes, and many other topics. And we'll also be discussing best practices when it comes to handling finances. I'm Sarah Winju. I'm the Leadership and Capacity Development Specialist for the Extension Lakes program at UW-Stevens Point. And I'll be helping to facilitate these chats.
I'm Eric Olson. I'm the director at Extension Lakes, and I'm also helping to facilitate these conversations. As you might have noticed, we bring in different featured guests to join us depending on the topic. And this month, along with Peter Jensen and Dave Quades, who some of you might have seen in previous chats, we're privileged to have 2 individuals join us from the accounting firm Kerber Rose. I'll let them introduce themselves in a moment, but I want to take a time to say that just because Kerber Rose is joining us, it doesn't mean we're endorsing them in any way. They're just one of the accounting firms in Wisconsin that can help you out. And they're somebody that we got to know at the Lakes and Rivers Convention. And so they were kind enough to join us today and share some of their insights and time with us. So Nicole, would you introduce yourself and then introduce David?
Yeah, so I'm Nicole Dunbar. I'm the Accounting Services Manager at Kerber Rose. Prior to joining a couple years ago, I was a finance director for local municipalities, so kind of understanding the Lake District side of taxing, a little bit of knowledge there. I'm happy to be here today. Thank you.
Yeah. Good morning, everyone. I'm David Minch, one of the government audit shareholders at Kerber Rose. Got about 15 years experience working with governmental entities, focusing on audits and accounting services, both in Wisconsin and Minnesota.
Peter, you want to introduce yourself? You gotta unmute yourself. Maybe we'll go to Dave.
Okay. So I'm Dave, and I'm honored to represent Sand Lake Association and its membership. We are a small association in Rusk and Chippewa counties, and I am a proud graduate of Lake Leaders Institute number 15, and then also a member of the Capacity Committee. Peter?
And thank you, Dave. My name is Peter Jensen. I'm the former chairperson of the Eagle Spring Lake Management District down here in Waukesha County. Also was the dam operator, member of the Capacity Committee, and it's a pleasure to be with everybody this morning.
Thank you. So this is the most people we've had on any episode. It's going to be fun juggling microphones and making sure we're all on track. Why are we doing an episode on finances? We get a lot of questions at Extension Lakes from both lake associations and lake districts. And a lot of those questions actually come in around money and finances. Money obviously makes the world go round. It's what you need to get things done around your lake because you typically have to either buy things or pay people to do services. Unless if you come as a volunteer to a lake association or lake district board with a background in accounting or money management, it can kind of seem intimidating because this isn't your own money anymore. This isn't household money. This is organizational money. This is the lake district or the lake association. And really, if you're a volunteer who's involved as a treasurer, you have obligations to ensure that this money is not squandered, wasted, somehow lost in a process. If you're whether you're with a lake association or a lake district, there might be rules and laws that affect how you actually handle that money. We discussed in a previous episode, episode number 4, really some big picture concepts around organizational budgeting. And so this episode, we're getting a little bit more into the nitty-gritty details, looking at some of the principles and practices that can help keep your organization on a sound footing and help you build trust with your donors, with your taxpayers, with your local governments that are all around you. Trust is an important asset for you to develop and to cultivate, and how you handle money is a big part of building that trust. And just as a reminder, in Wisconsin, we have these 2 major types of organizations. We have lake associations, which are typically just nonprofits. They may be full-blown IRS recognized 501c3 nonprofits, or they may just be small groups of neighbors getting together to work on lake issues. And then we have lake districts, which are local governments. And they're a special purpose unit of local government. And really their main power is all about kind of what we're talking today, which is money. Lake districts have the ability to levy taxes and to charge special charges against property owners to raise the money necessary to carry out programs of lake protection and rehabilitation. Differences between these 2 are just sort of encapsulated on this slide. But bear in mind that you need to know which group you're in. There are some people out there still that are confused, and it doesn't help some of them name their lake district after an association. It makes things really confusing. But make sure you know which type of group you're dealing with. And one of the distinctions between these 2 groups is really how you're handled and what your interactions might be with the federal IRS. Lake associations, and Dave is here to kind of represent lake associations. Lake associations have to do some reporting to the IRS. Is that right, Dave?
Yep. And it's actually fairly straightforward depending on how much income the lake association has over that year. So we're a smaller lake organization. We stay below the requirements to have to fill out a lot of paperwork. And the paperwork that we do have to fill out is very straightforward. It's basically, we do a postcard and we make sure that, you know, we've stayed under those limits, unless for some reason maybe we'll go above those limits, and then we'll figure out what to do. But right now, for small lake associations, it's a fairly straightforward filing at the end of the year for both the federal and the state. Now, we are going to have to, and we'll talk about this later, our association now has employees, so we'll chat about that later, and it's going to be a little bit more difficult.
And Peter, comment on that. Once even a lake district brings on an employee, their relationship with the federal IRS changes a bit.
Well, you know, a lake district is a government entity, and as a result, it doesn't have to file income tax forms. However, if we do have employees, you are subject to filing other forms, such as tax withholding forms, Social Security payments, and other related things. Also, kind of related to all this is, if you have employees and you're a government entity, you're going to be subject to workers' compensation payments to the appropriate officials that are associated with those accounts. Lake districts also don't have to pay property taxes. However, if they make a purchase of a property or an acquisition, they must file the appropriate paperwork with local governments to make sure that that property is listed as non-taxable.
Yeah, and that can vary from municipalities. So just making sure you research within your municipality, kind of their rules and regulations for that, and the paperwork that needs to be done with them.
Yeah, to play off of that, Nicole, I think a lake district, it's fairly straightforward because it is a local unit of government, like a school district. Lake associations, as a nonprofit, might be a little bit trickier to get that process worked through the local governments, right?
Yeah, definitely can be. I also kind of want to touch base when Dave mentioned doing a postcard. So your 990N is that postcard. So keeping your gross receipts less than 50,000 a year. Where he's talking, things might get a little tricky now for him. So Wisconsin, obviously, if you solicit a receipt 25,000 or more, and or you have any paid employees, there is now filing requirement for Wisconsin. So if you don't have that situation, you don't have a filing requirement with Wisconsin, you just have that 990N, which is fairly simple and straightforward. Once you hit those thresholds, it adds a little bit more work into it. There are e-filing options for your 990 that are free online through the IRS. One thing to note is that you will have to e-file 990s. So even as you progress, there is no option to paper file. If you try to send a paper file, the IRS will send it right back and say it needs to be e-filed. So just a heads up, no matter what form you fill out, will need to be e-filed.
Yeah, the 990 is super easy online. It's literally a checkbox that you say, yes, I testify that I had less than $50,000. It is extremely easy. And like I said, and Nicole, you brought it up. It used to be a postcard. Now you just do it online. Super easy.
And Nicole, the Wisconsin forms we have listed here, are those e-file, or is that going to be something where they print a document out and then fill it out and mail it into the state?
Those are still going to be print and send, and I have them in the order of, there's different rules for each one. So obviously, as you progress with more and more receipts or assets, you will progress in form. So the 1943 is the simplest form. 1952 isn't too bad. 308 gets into extra detail, and I'd imagine you'd be filling that out if you're doing a full 990. I don't know how many people are at that high level for a 990. That usually gets a little trickier. But those are kind of the forms. But yes, Wisconsin is still print and send. During COVID, they were allowing those to be emailed. So at least there was an e-file option that way, but that has since been removed and now everything is mail again.
Okay. Are there big penalties if someone messes this up? Like what happens if you're late?
If you're late, don't ask me how I know from a foundation standpoint as a treasurer. If you are late, you kind of just get a tisk warning. Here you go. We still need this. Remember, these are informational returns. Obviously, you're not filing any kind of tax payment with them. It's informational. Federal, I have not missed that deadline to understand kind of what's with that one, but that's definitely from a state standpoint. It's more of a reminder of, hey, you need to get in, and then there could be small penalties that'll accrue if you don't.
Yep.
But also your status.
Yeah, Nicole.
Oh, sorry.
Go
Go ahead.
Go ahead, Peter or Dave. Go ahead.
So a couple of years ago, we may have forgotten to do our 990N, and we got a letter from the federal government saying, "Hey, we're going to revoke your tax-free status because you didn't file your 990N." And quickly, we filed our 990N, and we didn't have to pay a penalty. It wasn't a big deal, thankfully, but nonprofit for us is really important. So that threat worked really well. But it was a mistake. We forgot.
Yep. Yeah, that's probably the most common issue I think that we see with the 501c3 organizations, especially the small ones, is just not timely filing that 990. Whenever there's a transition between members on the board or individuals doing the work, it can easily be forgotten. And so, as Dave just alluded to, they send you a reminder, hey, you have to file this. Sometimes organizations won't get that notice, or they'll neglect it even further. And at which point the IRS will, in fact, revoke your tax exempt status. And then it becomes a very cumbersome process to get that reinstated. So again, it's really important to understand, again, if you're an association or a district, and then make sure that somebody on an annual basis that is filing that 990 informational return.
One thing we mentioned is that whether you're a lake association with even a small budget or a lake district, when you start hiring people and paying people, your relationship with all this changes, right? So we have another slide that's sort of covering some basic bullet points around payroll. And Nicole, you had some thoughts to share about what you've seen from different groups in terms of handling payroll.
Yeah, so I think we just want to kind of touch base on here. If you have year-round staff, some of you might not have year-round, it might just be seasonal. Making sure you have the right forms. So your W-4, your I-9, the I-9 has very specific rules that it needs to be filled out within 3 days of hire. Signed and dated. It also has specific record retentions, and it needs to be kept separate in their employee profile from the employee profile. So there's definitely some rules with that. Your state tax withholding and direct deposit, if you have that. Those are kind of the main forms that you want to get when you have new employees. When it comes to seasonal staff, remembering that you have new hire reporting. So you may not have staff that get paid until all of a sudden you have seasonal, which I understand sometimes comes with grants, right? New hire reporting gets missed sometimes. You have 20 days within this from their start date to get them reported with the state. I have a link there. The other big thing is 941 quarterly filings. So if you don't typically have employees and all of a sudden you do, that is the IRS form that needs to be filed. And the IRS is not the easiest to work with. If you miss this, they are not keen to take their interest and penalties off, and they accrue on a daily basis. So those add up quickly. You have a WT7 filing with the state annual in Wisconsin. Software could be a huge help with this. And one thing I want to hit on with software when we talk about especially seasonal staff is some software platforms will charge you based upon active employees. So remembering that when you have your seasonal employees, once they're done, to get them removed as active employees, so you're not being charged for an employee that you actually aren't currently paying. But those softwares do become very helpful, obviously, for year-end filing with W-2s that need to go out to those employees. I have some resources listed here for staying current with payroll laws and changes. These are free resources for you. I would highly recommend the newsletters from the DOR, from the Department of Workforce Development and the IRS, making sure you get on those so you're current with all those things. When it comes to the grant, just making sure that if that grant is there to cover the expense of those employees, some pitfalls could be, are you staying within the realms of that grant, right? You're not overspending on employees for what the grant has given you, making sure that you're meeting all the requirements of that grant of what you need to provide for support for those employees that are there. So those records. And this is another one where payroll gets tricky. People aren't comfortable doing payroll. And so sometimes they go to external services to help them out. And that's extremely helpful for anyone who is not comfortable or well-versed in the payroll realm.
I would add that I think payroll is probably the one of the more tricky areas that a treasurer or a board is going to have to deal with. In the municipal world or the local government side of things right now, this is probably the area that we're seeing even, any governmental entity struggle with, especially when there's turnover, roles changing, as Eric alluded to early on, unless you have accounting experience, this can be very cumbersome. And the reporting requirements are, set in stone. So, we're working with a couple entities right now, not necessarily like districts, but that were either late with 941 filings or they filed them incorrectly, and penalties and interest are accruing, and these add up very quickly. So this is one area, regardless if you work with any external provider, I think it's good to contact, a local accountant, even one of your local municipalities around you, whether it's a town, village, just to make sure that your understanding is correct, both from, a form perspective and also a filing requirement, because, if the IRS does contact you, it is a very cumbersome process. It takes a long time to resolve any issues. And as I previously said, that those penalties and interest are going to accrue, and they're going to accrue at a fast pace, which, obviously that becomes another expense to the association or district, one which likely we don't have budgeted for. So I just want to emphasize that, make sure that you really understand your payroll reporting requirements.
Dave Quady, you said that your lake association recently went through some changes in terms of relationships to employees. Do you want to talk a little bit about that?
Yeah, absolutely. So we have taken advantage of Clean Boats, Clean Water for a number of years, and we have outsourced the hiring of employees to a local organization. And this year, some things changed, and so we ended up having to hire our own employees and trying to come up with what do we need to do now that we have our own employees. And of course, this chat will be very helpful, right? Because we're learning a lot as we go, but making sure that you are filing all of those forms and making sure that, again, back to what Nicole said, finding a piece of software that can help you with that is going to be super, super beneficial. So yep, it's very much a learning curve for us.
We will comment more on software a little later on in this discussion, but I would encourage, anybody who does have employees to make sure that you are utilizing some sort of software, whether it's QuickBooks, there's a number of other platforms out there, but that's really going to help you calculate the correct amount of withholding, the correct other taxes or deductions that you have to do. And then it also assists with the reporting, to the Department of Revenue or the IRS. So, hopefully we're not, calculating payroll by hand and doing these forms manually. There's a lot of great tools that are relatively low cost that can assist with this.
Sure. But for an association or a district, kind of making that leap into the now we're an employer realm does mean, I think, getting more serious about how you handle your finances. And maybe it does mean getting into that subscription-based software or something that's going to assist someone out. Because I think you're right, David, that a volunteer treasurer probably doesn't want to deal with all the manual calculations that might be involved, and they could justifiably say to their board, "Hey, if we're going to do this, we're going to hire people. We're also going to pay for this software. Like, there's no way we're going to do this just manually."
Yep. And, if you are an association or a district that is going that route or recently went that route, again, I think I would recommend talking to some professional in the in the accounting world, even so, just to make sure that your software is set up correctly. If we set it up incorrectly, we're always going to battle, it being wrong and have to maybe manually change things or deal with incorrect reporting. So I would advise you, to contact likely any accountant should be able to help you with that, just to make sure that things are done correctly and that we understand the software. So it'll be very advantageous for you to do that.
Yeah. One thing to note on that is because our association is at the very beginning of this journey with employees, we've reached out to our membership and said, hey, anybody out there have accounting backgrounds or is an accountant? And so we're going to leverage those relationships because they, one, have a vested interest in making sure that our lake is clean and safe, and B, hopefully they're landowners on the lake. And so maybe we can get some volunteer time from them to help us with this.
And
That's a
Dave,
great idea,
I think one thing too that we have to point out is that there are some kind of ancillary issues that you have to deal with too once you have employees. If you're hiring juveniles, you may need work permits from the state of Wisconsin. Those have to be filed. Federal and state law requires that employees report newly hired or rehired employees in Wisconsin to the Wisconsin New Hire Reporting Center within 20 days of the employee's start date. There are these kind of all secondary issues that can't be ignored because they are important, that kind of revolve around hiring employees and payroll and all that.
Yep.
I think that's also why if a group does have a supporter or a partner that's helping out with this, if that's a healthy relationship and they're willing to help you in that way, trying to continue that relationship is worth making an investment of time and effort. But understand, Dave, in your situation, when that group says, no, we've changed kind of our geography or our priorities, then you're suddenly find yourself on your own. So this is definitely a steep learning curve. We also think, though, that once you've learned this and figure out how to do it, it opens up a whole lot of other opportunities maybe to get things done as far as capacity.
100%, Eric. And that's when the board met after we found out that we weren't going to be able to use the organization we've used in the past. We did look at it as this isn't just clean boats, clean water, right? This will enable us to be able to open up and expand if we need to do other employees as the cases may be. We should have all of our quote infrastructure figured out this year, and it will be a steep learning curve, but we're working through it. And to your point, it does, once you do it, it's done.
And Dave, I think, one of the key things to remember is that, as you go through this journey, it's document. The information that you learn, the procedures that you learn need to be documented so that when somebody else takes it over, you don't have to restart the learning curve. They can be given a piece of paper or a computer file that says, this is the procedure, this is the timeline, this is what you need to do.
Yep. And it's a topic for a future chat where we're going to get a lot deeper into insurance. But another thing to keep in mind when you're hiring somebody is you're going to be responsible then for workers' comp insurance. for those people as well. And we'll talk about that more in a future episode.
That's right, Eric.
Guess on a transition here, we've got, payroll is one of the ways you spend money. One of the ways you get money is through donations.
Yep. And so for us in a lake association, we get all of our money through dues and donations. Generally speaking, our membership is $20, and we almost always get from those members an additional donation. We do keep those records separate. So we have our dues records, and then we have anything above and beyond or as a straight donation to the association. We are and have only to this point accepted cash. And it's not that we would say no to somebody that wanted to donate physical goods. We just haven't had that opportunity. So our organization has done a cash-based donation to raise money for whatever project that we're trying to do around building capacity.
Yeah, the other option, obviously, that you guys haven't touched is those non-cash donations. And I think a few things that we want to touch on here is obviously if somebody gives you property, whether it be land, getting that appraised, could be a boat, could be a vehicle, getting trade-in value. I think we talked about a little bit how somebody could come in and have a very specific number in their head on what this piece of property is worth. However, for your books, we really should have the support of what it is actually worth. If somebody gives stock fair market value at that date, hopefully you're working with someone that can sell that stock the very next day. Most people's intent when they give you stock is not to have you hold it, but to have the cash value of it. Also having an in-kind donation policy if you don't have one, because there are times in which people may want to donate something to your organization in which you have zero need for it. So being able to say no and have a policy that says, nope, this is what we accept if you have it, or maybe it's, not in working order, it's just getting off their hands. An example is we have a not-for-profit organization who was donated a hot air balloon basket. They have zero need for it, so it continues to sit in the basement. Had they had a policy, an in-kind donation policy that stated, what they did or didn't accept, they could have turned that down and said, no, we don't accept this. It's just a few tidbits there.
One question I often get is, can a lake district receive a donation? And my shortest answer is yes, of course it can. If people want to donate more money to the lake district, they can do that. Just like if I want to donate money to the city of Stevens Point or Portage County, I'm welcome to do that. And also because they're a local government, they're automatically tax exempt in the IRS's view. And a donation to a lake district or a lake association is also considered to be a tax exempt donation, right? I mean, that's what might motivate people to make those types of gifts. Kind of tricky though, we have to, one thing people sometimes do is they donate for a specific cause. Is there a role for like segregating accounts and making sure that if someone says they're donating for a purpose, that it gets tracked and followed, or does it all just go into a general pot of money?
I would add that I think it's really important to understand how you're soliciting the donations. If you're doing a campaign for a capital improvement, just say a boat ramp improvement, you're really asking individuals or businesses for money for that specific purpose. So, I think it's good to have a policy and recognize and track that funding differently because the intent of the donation was for a specific purpose. Now, if it's an open-ended request for donations, you don't necessarily need to earmark or track that separately because it's for your general operations. But again, we're going to talk about policies and procedures in a little bit, but I think it'd be very important to understand, what the purpose is and document that at the board level so that you can track it. Because if you get a substantial or sizable donation for a specific purpose and then you end up not doing that project, that individual could request that money back because it's not being spent on the intended purpose. And so you want to make sure that you've got records of here's what we raised, here's what we spent it on, so that it's clear and transparent, right? I mean, the more transparent that we are, the better records that we have, we're going to be able to satisfy any donor's requests should they come up.
Yep. And to that point, David, last year, actually 2 years ago, we were raising money to add a device to our boat landing to monitor traffic going in and out of the boat landing. And so we did ask specifically, hey, can you help us fund this particular project? And our treasurer made sure that that money was kept, that we knew what money was coming in for that project and used
Yep.
only for that project.
Yep. One question that I get a lot from governmental entities is, do we need to create a separate bank account to track this money? And the answer is no, as long as you have some sort of mechanism, whether it's a spreadsheet, or if you're already using some sort of accounting software, creating a separate cash account to really track that funding. Previous in a conversation, Eric said, whatever works for you. I mean, I think that's a logical response. As long as you can, justify and support, here's what that balance is.
I have a quick question. When you say cash, you mean people like give cash or write a check? Is
Yes.
there ever a situation where they can donate via credit card? Are
Yep.
lake districts or associations set up, and how would one go about doing that?
Yeah, so we do allow electronic payment. So we use Venmo and PayPal to do it. There are maybe other ways out there. Well, there are other ways to do it. So we do allow that so people can pay electronically if they choose to. And they can do that on our website, or they can bring their phone and we can accept payment that way. Now, there are negatives sometimes with some of those payment services, taking a percentage of it. And when that occurs, we just try to encourage the person to understand, hey, we have to pay a percentage. You see this a lot now in dining out, where if you use your credit card, they charge you X% more to cover the cost of the charge, right? And so we're starting to do that also, saying, hey, it's costing us 3% or whatever it is. Can you please up that donation by that? And if not, that's their choice. We just get a little bit less money.
Right. Another way that lake associations and lake districts can bring income in. Some people get queasy about this, but you can borrow money. Dave, you've got an interesting story maybe about borrowing money from a lake association perspective.
Yeah. So, and we'll talk about grants on the next slide, but there's some grants that require you to, before you get the grant money back from, and this one was the DNR, the Wisconsin DNR, before we could get reimbursed, we had to pay the vendor, or we had to pay the property owners first. Well, our lake association doesn't have a lot of money in the bank account. And so we kind of ran into a situation where we had to pay the vendor a significant amount of money and we didn't have it. So what we did was we went out to a couple of the individuals within the organization and their members, their paid members, and asked them if they would temporarily loan us the money. And then we set up a very, the board signed it, the members signed it, but it was kind of a high level, hey, thank you very much for this money. We will pay it back as soon as the DNR reimburses us. If it takes longer, we will renegotiate, but it was at 0% interest and things, which it was an agreement between the association and two different members. And it worked really well for us. It kind of floated that money for about 60 days until we got reimbursed by the DNR.
So a very temporary short-term thing.
Yep.
Peter, there's some reasons why a lake district might want to borrow money as well, right? And they're probably not going to just go to a taxpayer and ask for a loan from them, right?
Yeah, lake districts as a government entity, borrow money like an individual or a corporation would. There may be a number of reasons that a lake district would borrow money. It could be for something like the purchase of a harvester or a truck. It could be for the purchase of real property. And in some cases, when you're dealing with these purchases, the lender may require a security for the loan. If you're buying a truck, very often the loan or the requirement is that, the truck becomes the collateral for the loan, just as if an individual purchased it. But there may be some differences out there too. The collateral that you have might not be acceptable to the bank. And I think a good example of that is if you have a lake district that is doing major repairs or reconstruction of a dam, that dam may not be acceptable as collateral for the loan simply because the liability associated with the dam is greater than the loan amount that you're taking on out. So it's important that you start to work on these things early with your lenders and do some shopping around to find out what the requirements are and what you need to do in order to have the funds available when you deal with this. One thing that Lake District can use as collateral are tax anticipation notes. That's basically where you say and agree that we will issue as part of our tax levy a certain portion of that will go to repay the loan. That is very often used as a collateral of a loan. One thing with this that you have to remember is that a lot of lenders have very specific requirements on wording of documents that you are going to submit to them. That may be specific wording on the resolution that is passed at the annual meeting or other types of documentation that's there. Maybe if you're purchasing land, this would include whatever restrictions or other issues are put on the property tax records at the Register of Deeds. So working early on this to make sure that you have all the proper language is important so you don't have to hold a special meeting at some point in time, to clear some of this on up. The other thing that I would say is that, when you're starting to borrow money, you need to approach this really as if you were an individual. There may be a number of advantages, for example, if you are making a purchase to having a down payment, that you can provide in cash. Very similar to that if you were purchasing a home, you can make a down payment to reduce your interest payments that are there. That is something to consider. Other things to consider are, for example, what are the terms of the loan? Do you need all the money at one time? If I am doing a large project, maybe I don't need, the total amount up front. Maybe I need it, spaced out over a period of a year, say during a construction project. Look at the terms of the loan. Can you borrow this, on an as-needed basis, or do you have to take all the money up front? Obviously, if you have to take all the money up front, you are going to be accruing interest on this with money that's there that you're probably not going to be able to make back as much if you put it in CDs or other types of programs. When it comes to to really working with this, I think the key thing is to start early. Be sure that you know what's going on. Don't be afraid to ask for help. A lot of times, the language in these documents may not be familiar to you. You may want to have your accountant review it. You may even want to have an attorney review it to make sure that you understand all those provisions. And again, as I mentioned earlier, document. Make sure that people in future generations understand what their liabilities are, what the requirements are, so that they don't run afoul of something that you did years earlier.
That's a great point, Peter, to, get an attorney involved. These debt documents, are written in a very technical language. And so, oftentimes it's tough to understand. But a couple things that I just wanted to point out is, I think both of you alluded to really understanding, what you're getting yourself into. Some debt instruments do require an audit. So make sure that if there is one, you understand that. And then some of these loans will also have language in there where they might not be able to be refinanced or, something done to reduce that interest rate, either over the course of the entire debt issuance, or maybe it's 10 years until they can refinance. So, right now we're still in a high interest rate environment. And so if you do borrow money right now, it is going to be at a substantially higher interest rate than it was, 5 years ago. And maybe in 2-3 years, interest rates drop down significantly. So just make sure you understand, do we have the possibility or the availability to refinance? in the future to really save ourselves some interest going forward.
And I'll just add that one of the reasons why people form lake districts is because they do have access to loans, particularly through the Board of Commissioners of Public Lands, state agency that's set up in order to provide local governments with relatively easy access to loans. Whenever a lake district, though, is anticipating, and in addition to what Peter said, this is the time to cross all your T's and dot all of your I's. So, for example, the Board of Commissioners of Public Lands might want you to verify that the notice given for the annual meeting complied with everything in Chapter 33, just to say that you mailed, or if they opted in, you emailed out that notice, that the notice included the full agenda and the proposed budget, and that the notice clearly stated that at that meeting, you're going to be discussing and voting on going into debt, borrowing the money. Because if you fail to do those things, that's where the Board of Commissioners of Public Land might say, we can't get involved in this because we don't believe that you actually have proper authorization from your taxpayers to borrow this money. So local governments have that Board of Commissioners of Public Land, but they do need to follow closely then Chapter 33 if they're going to anticipate borrowing money.
Yeah.
And I think, Eric, one of this, just involves, being honest with your lenders too, particularly if you're working with a bank. A bank might not normally loan to a lake district. Sitting down with the officials of the bank, explaining what your process is, explaining what the procedure that you're, trying to accomplish with the loan. All of these things, just that handshake agreement. And getting to know people, I think is important. So you don't have any surprises that come down later on, working with these people. And as we found, it's important to shop around. There can be considerable savings, with working with one group versus another. But you're not going to know that unless you go out and kind of, beat a path to their door and spend some time with the folks. It's not going to be a quick and easy process. You have to accept that. And you will find that if you do your homework, the rewards are generally very, very well worth it.
Yep. The one thing that I would add too is that if you're borrowing money, typically the intent of that borrowing is explicitly stated in any type of debt instrument that you undertake. So if you're borrowing money for a significant project, that money really needs to be used for that significant project. We can't just say we're going to do $100,000 in dam improvements and get into and say, well, we really only need $25,000 to repair this dam, and then spend the other 75 on a truck or other needs like that. The money is very restrictive. So make sure that you understand that. Oftentimes, things will come in under budget or under the anticipated costs. And so it's really important to talk to that lending institution, can you spend it on something else, or would they rather you pay that money back? We want to make sure that we're in compliance with these agreements too.
And I think, that brings up a very important item there. And that is, again, understanding what your project is. Anybody that's ever engaged in a building project knows that as you get into it, there are change orders. Those change orders occasionally become expensive. If you borrow money, is there a mechanism to easily increase that if you run into a problem or something like that was unanticipated that adds cost to this? What are going to be the requirements for all that? All of those factors, kind of come into this process, and it involves doing your homework.
Yep.
Eric,
Looks like we lost Eric.
Yep, looks like Eric's.
He'll be back in a moment, but I think we're transitioning to grants now.
Sure.
So Peter, do you want to jump in with the grants that you've received?
Yeah, grants are there are many different funding sources, for grants. I think the most common ones are obviously working with the DNR on things like invasive species, Clean boats, clean waters, various other types of activities. There can be Environmental Protection Agency grants coming on down. Don't forget that there are foundations and corporations that do make grants. Sometimes we have a tendency of confusing those with donations, but really a grant is a little bit different than a donation in the fact that it is for a specific purpose and may very well require some sort of an application process. And of course, then there are various special interest groups that are out there. I think one of the things to remember with almost every grant that's out there is that most grants are on a reimbursement basis. That means that you're going to spend the money first, and you have to have working capital to cover those costs until such time as that money can be refunded to you. If you're fortunate to be working with the state of Wisconsin grants that are offered through the DNR generally have a pretty quick turnaround. If you're working with the federal government or one of the federal agencies, some of those grant reimbursements can take months and in some cases years, depending upon what you're dealing with. So you have to have the capability, of working with those funds. And remember that whatever interest or other charges that you accrue in this, are not going to be covered by the grant. You're going to have to pretty much fund those, as you out of your own pocket. I think when we get into this, the key thing with any of these grants of any kind, whether it's state or local government or federal, is that you have to understand what the requirements of that grant are and really what you're getting into. If you specifically state that you are going to be doing something and apply for a grant for that, you have to do that. You can't, divert money. You can't change things. Some grants have very specific requirements, particularly when you're getting into the federal level, that go beyond what state regulations are. And these can be everything from bid requirements to language within bid requirements that are there. It may have, requirements in there for purchasing of any materials, supplies, and other things that require you to purchase from U.S.-based sources rather than, importing materials or supplies. All of this needs to be understood up front, so that you don't find that all of a sudden, well, we've got a grant, we've started to spend money, and all of a sudden we have an issue with this or an audit requirement or something else that's there. Also, please remember that as you're working with grants, it's important to understand what sort of financial paperwork is required to be kept. Some of these grant programs have very specific requirements on document retention, which go far beyond what the state of Wisconsin would normally require at this point in time. So understanding what that is, making sure that those documents are held, that they're held in a format that's easily available should you get an audit. And again, I think, as we mentioned before, you got to do your homework. You got to use due diligence in all of this. If the grant all of a sudden, is acceptable to you, go for it. But if it isn't, then you really have to, be honest and say, listen, this is not for us. We're going to have to find some different way of accomplishing whatever task we want to out there.
Yeah, I'll just add in here, the term audit gets thrown around a lot, and, a lot of the lake districts or the associations, don't have an external audit done. But even though, you are accepting these grants, the state or federal agency still could do a desk review or require you to submit, that additional documentation or proof that you're following those grant requirements, as Peter just talked about. So, I've worked with some entities before that said, well, we haven't done that. We know we're not going to be audited. But really it's, on you to make sure that you're in compliance with the federal and the state agencies that, are giving you this money. And if anytime you accept a grant, you're going to sign a grant award letter. And most of the time, if not all of the time, the requirements or the documentation that you're required to follow, it might be to the federal single audit compliance, requirements is going to be specifically laid out in that grant agreement. So make sure that or that grant award letter, make sure that you're reading that, understanding it. Never just sign off on it because you're going to get $50,000 or $100,000 in funding. Peter did a great job, by stating, you've got to understand the requirements of this.
I think we already discussed that we want to maybe dive deeper into grants in a future episode. So more to come on grants. So thank you for all of that information. We'll move on now to saving money and investing.
Yeah, this is another major area where the differences between lake associations and lake districts can't be overstated. Lake districts are local governments and they're funded by tax dollars. And the people that you're charging taxes to, they don't get to choose whether to pay it or not. It's compulsory. They're forced, right? That's really that power of a lake district is like, if you fail to pay your taxes long enough, then the government will take your stuff away from you. So that shouldn't be taken lightly. People generally agree to that system because they think they're getting something in exchange for the taxes they pay. They may even see the impact of it on a lake district. They usually can. It's very local, and they're participating in the budget process. We pay a per gallon gas tax at the gas pump, for example, and we expect that money to pay for building and maintaining roads. And by and large, that's what happens in US and Wisconsin. And the closer we can match who's paying for something and what they get in return, the better we feel about government in general, right? So if we were paying all of our state gas taxes in Wisconsin, and then someone took that money and spent it in Minnesota, we'd be mad. We'd be saying, give us that money back. So we want to closely match those things. And then if we can closely match them in time so that what you're paying taxes for now are things that are going to happen in the reasonable near future. You don't want to pay those gas taxes at the pump and they say, okay, sit down, we're going to fix the roads 20 years from now. Like, what? No, I paid for this, you fix it now. So we try to match those things in general. And what I'm getting at here is that a lake district can find itself in a little trap of socking money away and saving money up, thinking that they're being principled and that they're storing that money for some future use, when really, for a theory of taxation, you shouldn't be doing that. You should be spending money pretty much as you get it in. Socking money away is basically taxing people today for something they're never going to maybe benefit from. If they move away from the lake or if they pass on from this world, they've paid for something they never got to benefit from. So oftentimes I talk to people and say, you shouldn't be socking money away. And I think the challenge is that they come from a lake association background, maybe they've been operating a lake association for a long time, where they say, well, that's the only way we can get big things done is to sock money away and to save up so that we can pull the trigger on a project. Dave had mentioned the idea of borrowing money short term from somebody on the lake, but generally a lake association board would be nervous about borrowing, say, $500,000 or $1 million, because as a lake association, as board members, they may be personally liable to making sure that that money gets paid back. So in lake association and the nonprofit world in general, it does make sense to sock money away and save it up. But in lake district world, it's sort of flipped around. It might make a lot more sense to borrow money, because then if you pay it off over time, the people that are paying the taxes year to year to pay off the debt are the same ones that get to enjoy, for example, the aquatic plant harvester or the lake that's now protected by the newly restored dam. So I wanted to just kind of make sure we go into this with this basic understanding of the differences between lake associations and lake districts when it comes to socking away or saving money.
Eric, those are excellent points. And I think the other thing that we need to look at is really just some basic, I guess accounting information regarding saving money. When you put money away and you invest it, whether it's in a CD or something, you have to remember that the rate of inflation may very well exceed whatever you're making on that money. Therefore, having a whole lot of money sitting in an account may not actually be making you money. It may be losing you money. And I think a good example of that occurred just a couple of years ago in 2022. The general inflation index for 2022 was about 8.38%. However, the maximum CD rate that banks were paying at that point in time was running around 4%. That means that, you're losing 4% on the money that you've got in there. And don't just be fooled by that consumer rate of inflation. Also that year, the construction price index, if you were going to be repairing a dam or a building or something like that, was running as high as 17%. There is no investment out there that is going to compensate for that. Therefore, if you really have to do it at that point in time, borrowing money, even if you think it's at a higher rate, is probably going to be, the better option. The other thing that I think I need to throw out as a caution, because it comes up every once in a while, is that having excess money, is not something to gamble with, and putting it into what I would consider to be risky investments, like the stock market and other things, probably is not wise. I think everybody knows that the stock market goes up, and that can be very alluring, but the stock market also goes down. And I think there are ample cases out there where lake districts and other governmental entities have made major investments in the stock market, only to lose their shirts in the process, which puts them in a worse situation than if they never would have made an investment in the beginning.
Yep. One thing I'll just add, and I get asked this question a lot from governmental entities, is, we consider kind of that equity, that excess cash, those reserves as fund balance, with government accounting terminology. I get asked, what's a good amount to have? And that's a tough question to answer because some of the municipalities that, individuals listening to this live in, if it's a town, some towns will accumulate resources for 3 to 5 years to do road work. Other ones will borrow every single year to do road work and then in turn levy. There isn't a right or wrong way to do it. I agree that we should never just accumulate. If you are in a spot where, hey, we've got some significant project coming up in 3 years, I think it's okay to accumulate resources for a short period of time, as long as, you communicate that to the vested interest of your district, and that they're aware of that. And so oftentimes that can be done, through a budget process that, we know we're going to get X number of dollars in revenue, but we're going to accumulate, a quarter of that this year for 3 years so that we know we have enough money to do this project as it comes up. But, we should never look to spend all of our resources, because obviously we have a cash flow need, as Peter talked about previously, those reimbursable grants. As those come up, it's nice to have those resources that are available, that we can spend it. Dave talked about that they're very fortunate to borrow money at a 0 interest rate, but if we got to borrow to, really short term, that's just an added cost. So there isn't a right or wrong answer to how much should we accumulate. It's really what makes sense and what do we have coming down the pipeline in the next 3 to 5 years. And, for municipalities and even some lake districts, they have capital improvement plans, right? Where it really lays out, here's our significant needs in the next, whether it's 3 to 5 or even 10 years. And so we can kind of budget and balance our resources currently, given that information.
Just one real quick thing from an association perspective. We had a motion from a member to raise our dues, and other members said, why would we do that? We don't need the funding. And so we have taken the approach that if we need funding, we will approach those on a project by project basis. So if, let's say, something horrible happened with invasive species on our lake and we needed to eradicate whatever that was or control, we would do that on a project-based perspective, instead of raising the dues and keeping that extra money in kind of a low savings account that's not paying us a whole lot of interest anyhow. So that was the approach we did from an association after being asked by our membership if we should raise the rates or raise the dues or not.
And Nicole, it was mentioned that you don't want to go into risky investments like the stock market. If you're a local government, if you're a lake district, can you even do that? There's reference here to Chapter 34 and Chapter 219 of Wisconsin statutes. Are there sideboards on what a local government can do with excess funds or fund balance?
Yeah, there are very specific rules, and I put these here. I realize lake associations probably don't, have to follow these guidelines, but these are very conservative guidelines, right? That the government has established. And so I think it's a good starting point if you have questions about saving your money, investing your money. understanding also your bylaws. Do you have an investment policy, you know, who does what, where, when, and why, right, with those funds, and just understanding your organization's risk versus reward, where they're comfortable with things. And the big thing I think we've talked about many times here is transparency is huge. So having those conversations, but yes, governments have very specific standards they have to follow for investing. They can invest, but they are very specific.
And another tool, again, that lake districts can access that lake associations cannot is what's called the local government investment pool. And all this is essentially a little bank organization that the state of Wisconsin operates as sort of a side project of the fact that it has a giant pension fund and other investments that they're managing. They said, well, you know, if there's money, this sort of fund balance, we can help you take care of that. It's something that I recommend that lake districts look into if they do find themselves just sort of having that fund balance and wanting to get a little bit of interest, because it does usually match or sometimes beats money market account return rates.
Okay, you know, something that none of us like to talk about are those little life unexpected situations that occur that nobody wants to deal with, but unfortunately life is full of surprises. For example, a weed cutter breaks down, or a tree falls on a building, or a dam needs an emergency repair, or something that happens, I think, unfortunately frequently, as we have all of a sudden a massive storm that all of a sudden dumps a lot of debris in a lake or river that needs attention. You know, these are costly surprises that very often, you know, we can't account for in a budgetary process. You know, there may be delays or time constraints in this. If I have a dam that is potentially failing, I need construction crews out there now. I can't wait to go through the time it takes to call a special meeting and to go through the loan process. In order to deal with these, you know, one of the options you have is to establish an emergency line of credit. And what this is basically, as our Lake District did, we established what we consider to be a standby loan. We had a local financial institution where we filed all the loan paperwork. The loan was approved, everything is ready to go, but we don't draw upon that loan unless there is a crisis that occurs. That gives us a line of credit of over $200,000 to deal with an emergency that would otherwise be unanticipated. I think one of the things that when you get into these emergency line of credits and other types of emergency funding procedures is, you know, make sure that you have financial controls on that. That not only I think is reassuring to the public, who is going to be eventually responsible to that, but some of the financial controls that can be put on these are, for example, to activate the emergency line of credit, it may require a supermajority of the vote of the board, or there may be a requirement that, you know, if you're going to be removing debris, that a local government or the state government declares a state of emergency at that point in time that allows you to access those funds. The emergency funds should be very specific in what they're used for, so that they don't get you know, misdirected at this point in time. These are things that none of us like to think about. I guess you could consider this like some people have a homeowner's line of credit to cover such things at this point in time. The same is true for a lake district or potentially even an association. If something happens and you need funding quickly to deal with a crisis, having a mechanism, whether it's savings or a possible loan system in place, can be a lifesaver at that point.
I guess one question I'd have for Nicole or David would be, do you have examples of like local governments helping each other out? So for example, if a town had an emergency need, does a county sometimes say, well, we can, if it's an emergency, we'll come in and we have maybe some fund balance that we can apply to the emergency with an understanding that you'll later on, after you set your taxes for next year, pay us back. Does the state of Wisconsin do that sometimes? If the emergency is big enough, it's sort of like, what's the point of having like an emergency declaration, if not to allow for some understandably not normal financial transactions?
Yeah, I've seen it a couple times where it's more of a joint partnership, I would call it, where the county or the local municipality works with the district to repair, specific items, or, if a tornado hits or a windstorm hits, the cleanup of debris. It's definitely an avenue. Again, it's going to be, sadly, I think a case by case basis. Obviously, some municipalities are in better financial condition than other ones. But, regardless, Eric, I think that's a great point to make sure that you establish connections and communications with the surrounding municipalities in the county that you are in. So in the event that there is ever an emergency, you do know who to contact and really to get that ball rolling.
We've mentioned it several times during this presentation today, but the idea of having policies and procedures. This may sound really dry and boring, but it really is important, I think, that you're not doing this sort of willy-nilly, but instead maybe you write things down. And I've heard from lake districts, for example, if they want to put things in bylaws. We generally advise against having bylaws per se for a lake district because you're a local unit of government, but you'll find that school districts and counties and towns all develop policies and procedures with different levels of formality. It's a good way to structure things. And then lake associations obviously can have bylaws, but also can have policies and procedures as well. I'm wondering what are some common policies that people use to address the safety and security of the money that they are controlling?
I would say that the most common policies are, if you think about the major transaction cycles, right? You're going to have a receipting policy, so cash coming in the door. You're going to have a disbursement policy, and then you may or may not have a payroll policy. Obviously, that's going to depend if you have individuals. But when we look at the receipting policy, it's really, from the point that money comes in the door, gets handed to us, what are the steps in place to make sure that that money is properly accounted for, that money makes it into the bank, and then that money is being reconciled, hopefully on a monthly basis. It's very similar, when we look at the disbursement cycle. When an invoice comes in, who's approving that invoice, who's writing that check, who's taking that check to the post office. It's always very tricky, right? Because for districts and even associations, you might be very small where there's one individual that is handling a lot of these transactions, if not all of them. I mean, we work with a lot of governmental entities where, there's a clerk treasurer and that's it. And so, inherently there's more risk involved because there's one individual. And so, there's a lot of safeguards that you can put in place, as board members or those charged with governance of an organization, both for districts and associations. My recommendation is that one, you make sure you have policies and procedures in place, but two, that you understand them. That should give you a level of comfort that things are being done accurately and that you understand how it's being done. I can't tell you how many times I've talked to board members about their policies and I hear the word trust. And so everybody always says, well, they trust this individual. And I would hope that, if we've got an individual working for our district or association, that we should be able to trust them, right? Hopefully you can trust all of your employees. But I always tell people, it's great that we trust, but we have to verify. And so whether that's, from a disbursement process, I would recommend that somebody else look at that invoice, give that invoice a review, make sure that it's accurate. We always think about fraud inside an organization, but vendors that you work with, they're apt to commit fraud too, and they might overbill you for work that was done, or say that they sold you 10 of a certain product instead of 5. So it's important that, I would recommend somebody else verifies that invoice, and then that whoever is, writing out the check, I like to see 2 signatures on a check. That's just, kind of the dual control, that 2 people are looking at it and authorizing it, and that one individual can't just write checks out to themselves. Cash from the receiving side, it's always risky because oftentimes somebody might, for example, they might give Dave some money after a meeting that, hey, this is my association due, or this is a donation. How do we verify that, the money that was given to Dave makes it to the bank account, right? And so it's good that we have processes involved, whether that's, you may or may not have a lockbox where things get deposited to if, money is deposited one individual or given to one individual, that, it's always good to have a receipt book from my perspective, that you can document that so much money was received and that, it's for this intended purpose. That way, it's very clear when it goes to the bank, you can reconcile that all the money that we received made it to the bank. And then kind of on the back end process is really the reconciling. And for most of you, it's really just going to be reconciling 1 to 2, maybe 3 bank accounts, depending on how you conduct your business. But that should be done monthly. And I would encourage, at your board meetings, whenever that happens, the frequency of them, that you're getting those bank reconciliations and that you're making sure that it reconciles. And so that's probably the biggest issue that we're seeing across governmental entities, and also the nonprofit side with our team, based on discussions, is that, they're saying cash is reconciled, but it doesn't really reconcile. And so, that information really doesn't support or safeguard any assets. And so a lot of, internal controls and policies stem from the tone at the top. And, when you look at the control environment of your organization, that's really, is the board holding that individual accountable? Are they doing, receipting, or are they doing reviews and verifying things? It's important that we set that, stern tone at the top, because we want to hold individuals accountable. We, of the 5 or 6 frauds that I found over my career, I think only 2 of them have made the news because boards choose not to prosecute, not to do anything about it. So fraud does happen more than the public is aware of, and it's just really important that we set that tone at the top. And one thing that I always hear is, well, we're a small organization, we don't have controls, or we don't have policies. There, regardless of your size, there are controls in place. You might just not really recognize what those controls are. But it's really just a good brainstorming session to say, hey, when something comes in, or, whether it's a bill or money, how do we make sure that it gets to the bank, and how do we make sure that, the money going out the door is for the intended purpose? So, really making sure that you document that and that everybody's aware of that. And that, going into, we've talked about software already. It's really important to utilize, whether it's a spreadsheet or simply just a bank register, a checking account register, or software, that we're really able to, identify the money coming in and the money going out. And so I would recommend, this is again from the audit perspective, that you utilize some sort of software that gives you the availability to print reports, whether that's an income statement or a balance sheet, to show, here's the breakdown of our revenue. We don't want to just say, well, money in, that's revenue, money out, that's expenses. Especially when you start looking into your payroll reporting, into your grant reporting, it's really important that we have a detail to break down what we're spending our money on. That's going to help, with the reporting aspect. It's going to help with the budgetary aspect. If you use a spreadsheet, that's fine. I think it's really important that you are able to break down the revenues and expenses to really track them. It's just critical that, as board members, you're really able to understand, how much money's coming in from what sources and where's our money going, and does that make sense compared to what we had planned or our budget?
Dave, those are excellent points, and I just want to add 2 things to them. First of all, I think it's important that if you're going to have policies and procedures, that we remember that these have to be written policies and procedures. They can't be something that, is kind of off the cuff. And not only do you have to have a policy or a procedure, but you need to follow it. And that means that when new board members come in, they need to be educated in what the policies and the procedures are of that organization. I also agree with you wholeheartedly on the use of software for tracking your documents, whether it's something, as you previously mentioned, like QuickBooks, or if you're using a spreadsheet in Excel. But if you're using any of the electronic means or even the paperwork means, please be sure that you have a separate backup copy of those documents. because unfortunately, things happen. You don't want to have all of a sudden a computer fail and you lose all your financial records. And those backups really should be off-site. Backing up a computer to a hard drive that sits next to it. I've had cases where that documentation has been lost because of a house fire. And people said, but we backed it up. Well, if your backup is sitting 6 inches from the original document, it doesn't do you a lot of good at that point in time. So, putting a little bit of thought process into this, yes, it may be a little bit of extra work with some of the programs. It does it automatically, which is nice because it doesn't take a lot of human intervention. These are things to think about as part of that policy and procedure process as well.
Yep. Yeah, the one thing I would, those are great points, by the way, Peter. The backup is key. And there's a lot of, smaller IT shops that can provide these kind of hosted services for a very small fee. If you're not capable of doing it yourself, again, it's just an important safeguard. But the one thing, as you're reviewing your policies and procedures, and I forgot to mention this before, but is really to understand how do we segregate duties. And so, it's just critical that we try to get, I always say, more hands in the cookie jar throughout the process so that, other people can verify and review. The last thing we want is one individual to have control over everything financial related, because again, then we're only trusting. And most people out there are good souled people that we should be able to trust, but there are bad apples out there, and sometimes when that opportunity or that pressure arises, this is a pretty easy target for people.
Yeah, just real quick, from an association perspective, several years ago, we did institute an external audit. And we did it for all of the reasons that we've outlined. It's super easy for us to do because we don't have a lot of transactions every year, but it does give us that reassurance, and the reassurance to the board, because they have to present that back to the board. And we do present the audit at the annual meeting, like was outlined earlier. One little thing that you might want to look at, and Sarah, I'm going to push people out to the website, is the position descriptions in the capacity toolbox, because they do outline for districts and associations what's expected from the roles, and there are examples that are out there, but you can leverage those if you don't have specific job descriptions for those key roles. This is a good way to base those roles on something that's fairly uniform across the state.
Yeah, and one of the things I think that all of this discussion can lead us to is the question of audits, and kind of what does an audit mean for a lake organization of any kind. It varies a little bit. State statute does require that an audit be presented at a Lake District annual meeting where the next year's budget is going to be discussed, but it also doesn't define what that audit is. And so our guidance has been to tell people, like, well, it's good to have people external of the board, someone who has some financial background, do what David was just talking about in terms of a going over of all the transactions and just verifying that checks were written for things that were actually done or received, and that payments that came in were accurately deposited and recorded. But there isn't really a definition here. And I think what I'm hoping that either Nicole or David could do is just kind of chime in on what audits mean to accountants, and that there are different levels of sort of financial review that are available, that it doesn't all have to mean a full-blown forensic audit all the time.
Correct. So I think when we work with organizations, I always say that they want an audit. Well, an audit is very comprehensive, and there's a lot of documentation that we need to go through to make sure that we're in compliance with accounting standards. And so typically, those are higher costs. Some alternatives that we've done for lake districts, and also some sanitary districts and things of that nature, is agreed upon procedures, or, a review if they're able to compile their own financial statements, substantially less in scope, agreed upon procedures, though I think that's a really great use of, the specifying an intended purpose or procedure. I did one for actually a Lake District last year where, they wanted me to review their trial balance to make sure that it made sense. And so obviously I was able to get supporting documentation. But then they also wanted me to review their policies and procedures, and I had them send it over to me. And, we walked through how certain things happen, and I was able to provide some recommendations for that. But again, what I did with those individuals is I walked them through exactly what I did, because they were looking to satisfy that audit requirement that Eric just alluded to. And that's something that they're going to do annually by themselves. It just, when you think of an audit, you think of a lot of comprehensive work. But, if you choose to do it internally, it can be relatively simple as long as you understand, what we need to accomplish by it. And, for the most part, for whether you're an association or a district, it's the verification of the tie out of cash. And so making sure that we have an actual bank reconciliation done. And then, that ties to the bank statement. And so, we don't want to see any variances noted below that we don't know what's going on. That's a red flag right there from my perspective. But then two, making sure that we obtain or retain support for the revenues and expenses. It's oftentimes easier to keep support for the expenses for the bills that we're paying, but we should have, bank deposit slips, things of that nature to really support the revenues. And so, the more organized and the more information you keep, the greater assurance you can provide to your organization that, what we're spending our money on or what we're collecting our money for is accurate, and that, full transparency, full disclosure, everything here looks good.
Peter, do you want to add anything about how your Lake District handles the presentation of an annual audit?
Well, and for our Lake District, what we do is we have a person with a financial background, go through those documents, and basically do not a full audit, but a review of those items that are there. I think it's important that, when you have people that are reviewing these documents, that they really should be from outside of the organization. You don't want to have the one neighbor, auditing or reviewing the financial records of another neighbor at that point in time. Having somebody external who can view this with a fresh set of eyes is critical, because if you can explain your financial procedures to them and they can understand it, chances are they're pretty good at that point in time.
Yeah.
It should not be, a quick and dirty process. The other thing I would point on out is that if you do change treasurers or you do have a significant turnover, that's the time to think about maybe you do want to have, an audit that is maybe a little more formal at that point in time to make sure that whoever is taking over these documents, has a clean set of books to work with and isn't inheriting, a problem from the previous administration.
Yeah. Yeah, that's a great point, Peter. I do just want to emphasize, if you do have somebody within your organization or even outside your organization, it's really critical that they have, a financial background. We don't want somebody that simply just doesn't understand it to look through things. We want to make sure that they're qualified to some extent to look through it, so that, anytime there's an issue, that's always the toughest to identify. So we want to be able to have some comfort that, hey, if there was something, they would have identified it.
Absolutely.
Thanks. All right,
Okay,
we've covered a lot of ground.
that was a lot of information, and we hope that it was super beneficial for those who watch this or at least listen to this chat. We know though that there will probably be additional questions. So if you do have questions, feel free to reach out to us at Extension Lakes, possibly also to Kerber Rose as well if you have questions, or others in your area. Thank you both to Nicole and David for taking so much time out of your day. We we didn't expect to be on talking about this for an hour and a half, but that's just so goes to show just how much there is and how important these issues are. So thank you for sharing your expertise with us. And Dave and Peter, thank you for continuing to join us every month for these monthly chats. We hope you enjoyed it, and please take some time to fill out the feedback form that is linked in YouTube, and let us know if you benefited from this chat, future episodes, if you'd like to see certain content in the future, and just provide us any feedback. We really appreciate it. Again, thank you for your time. Have a great rest of your day.